Welcome to the 2021 ACCIS Annual Conference. My name is Enrique Velázquez, Director General of ACCIS, the trade association that is the voice of the credit information industry in Europe. I will be chairing and moderating the 4 virtual sessions of this conference. As you're very aware, the world has changed drastically since we held our last conference in 2019. Not only has the pandemic sent shockwaves through the global economy, it has brought the world a tsunami of suffering, as United Nations Secretary General Antonio Guterres said recently. So my first thought today goes to all the stakeholders of ACCIS that have suffered or continue suffering because of COVID. With the vaccine rollout, there is some light at the end of the tunnel. And it is in that spirit of hope that we approach this first session of our conference. It is titled Supporting Businesses in the Aftermath of the Coronavirus Pandemic. As Europe starts to slowly emerge from the pandemic, uncertainty remains for many businesses. The risk of insolvency among SMEs is high, and there is a need for mitigating measures, including bridge support and debt restructuring for viable businesses. Stakeholders in the credit markets, lenders, credit reference agencies, borrowers, need to understand better the criteria and the tools applied to judge whether a business is viable or not, and therefore whether it has or has not reasonable recovery prospects so that support can be deployed effectively. To discuss with our audience about this topic, we have invited 5 experts. 2 of them will kick off the debate, each presenting a case study for 10 minutes. I will then invite the additional experts to provide their initial views for 5 minutes each, before we open the floor for your questions. We wish to make the discussion as interactive as possible. So I would like to invite people in the audience to send your questions through the Slido tool, which is on the right-hand side of your screen. We will also collect your views. 2 polls will be launched throughout the next 90 minutes. The first one should be available in Slido and will stay open during the next 20 minutes or so. It reads, in your opinion, how much time do you think will pass before the economy returns to its pre-COVID level? We have already returned to normal, 1 to 3 months, 4 to 8 months, 9 to a year, more than a year. With this question, we would like to understand how upbeat or pessimistic you are about the future. Please respond. Your feedback is important. One more thing. This is an open event. You can post about it or tweet about it. If you do, please use the hashtag ACCIS Conference. Before ending these remarks, I would also like to remind my speakers to stick to our time schedule and help me ensure that this session does not overrun. Let me now move to my first speaker that is with me at the QED studio here in central Brussels. Welcome, Eric van der Broele. Eric is Director of Research and Development at Graydon Belgium, a leading business information services provider. Eric has a lot of experience in developing algorithms that aim to describe the activity degree of a company, the probability of a company committing fraud, the probability of a company being involved in crime, etc. I was particularly interested in your observations about companies' behavior in an economy in discontinuity, something that Belgium experienced in 2016 after the terrorist attacks. And that bears similarities to the COVID pandemic. For today, Eric has asked himself the question, can COVID become a catalyst towards change in economic and social issues? I look forward to hearing your reflections. Eric, the floor is yours.
Thank you, Enrique. Well, as Enrique already mentioned, for me this adventure started, as a matter of fact, with the terrorist attacks in Brussels on the 22nd of March 2016. As a matter of fact, at that time, I was asked by Brussels government to observe and comment on the economical situation, who seemed to be at that time, on the first view, a kind of economy in distress, let's say an economical downturn. And I must admit that at that time, I started to analyze like everybody should, or as everybody did, meaning I took balance sheets, I started to analyze, calculating that kind of stuff. But very fastly, I became aware, I became conscious of the fact that I was answering right on the wrong question. Because what we lived at that time and what we live nowadays is not just a downturn of an economy, this is really what I started to call an economy in discontinuation. Let's put it in a metaphor. As a matter of fact, the question is not, in such a situation, when we observe a guy, a sportsman, is he fit? Is he healthy? Is he efficient to climb a mountain, to climb the hill? I think it's the wrong question in such a situation. The real question is, imagine that a guy has been thrown in ice cold water. What does he need at that moment to survive? And the answer is not efficiency. The answer is not being just healthy or fit or whatever. The answer is the amount of fat. It's the amount of fat that makes him survive during a certain time, to survive in that ice cold water and to be saved by the ship in question. So the main question here is not a question of efficiency, but a question of redundancy. In this situation, the first question or the first answer to cope with this whole situation is redundancy. So from that moment on, from 2016 on, I started together with my team, with my AI team, to develop a model that would be able to observe, in particular, the situation and the behavior of companies in such an economy in discontinuation. Of course, can I have next slide, please? Of course, the basics of all are history. You have to observe a little bit of history to understand which reserves the companies have at the moment that they enter into an economy in distress as we live now. So this first part, this historical part, just is taken into account to know exactly what is that amount of fat that a company has to be able to survive. But from then on, we developed a complete methodology to observe exactly what happens nowadays, actually, nowadays evolutions. And that does mean that we have developed instruments able to observe exactly the downturn of the turnover of each company week by week, to observe exactly how they deal, how they cope with their variable costs. And in other words, in which way they consume the amount of fat, and if they still have a reserve or not, or on the contrary, if they need really an injection need, meaning that they need more cash, more capital injection to be able to survive. And that's exactly the whole model that we developed, not only taking into account the history of a company, but really looking exactly what happens nowadays, week by week. Now, how does that show us practically? Let's look to the next slide, where you see more or less what we've done for each individual company. Of course, this is kind of an aggregate situation. To understand this slide, you have to know that one of the decisions we took on 12th of March 2020, meaning the day that here in this country the lockdown started, well, we first of all decided to freeze, to take a copy-paste, if you wish, of all our data sets and our conclusions. What doesn't mean that we know exactly the situation of each company just before the start of this COVID crisis, the healthy or the unhealthiness of the company. And that's exactly what you read on the x-axis. Talking about the x-axis, that means that you have to read this in columns. And when you look to the left column, you will see that in the Belgium economy, just before this pandemic, well, you count more or less 5.4% companies who were in major distress, near to bankruptcy. What's a normal situation in a normal economic cycle. On the other hand, we also counted more than 86% indeed of companies in the right column who were absolutely healthy in normal and good situation. On the y-axis, you see exactly what the impact is of the crisis till nowadays on those different companies. The upper level means that the companies still have, till today, enough reserves to survive. The underline, the lower line, so segment 1, 2, and 3, represent those companies who are very heavily affected by this crisis till such level that they have no single reserves anymore. Even more, the reserves are in minus. In this picture, it gives you an exact situation of the Belgian economy nowadays. As a matter of fact, it looks more in particular to segment 3 on the right under part. There you see that at this moment, we count more than 20% companies who are perfectly healthy, viable before crisis, who are in distress at this moment, taking into account, indeed, even the governmental helps. We also calculated that all those companies altogether need more or less 70 billion euros just to be able to survive. So this is the total injection need they need to be able to survive. And this shows also exactly that there's a difference between a normal economical downturn and where we live nowadays. This is not a normal situation. So this is not a question of solving the problem just by letting play, for instance, the how they say the creative destruction and so on. Because creative destruction is a game that is played within those 4.5% I mentioned already. You can't, as a society, as an economical tissue, you can't permit yourself to let down those 20% companies. Maybe we can turn over to the next slide. What does that mean exactly? Well, first of all, I think from previous slide, it becomes clear that it is impossible that only the government will solve the complete problem. As a matter of fact, nowadays, we have really to create a coordination between the different stakeholders within our society, meaning not only government, but also the courts, the banks, the companies themselves, the voters, the administrations, and so on, to have a coordination in actions. Just a small example. What is the sense of giving subsidies, aids to certain companies, to see them go bankrupt a few weeks after because they respond to the criteria of being bankrupt? So there's a need of coordination between government and courts for that, between government and banks for that. And this complete coordination problem still has to be put largely in place, not only in our country, but in the whole European environment. Maybe we can pass to the next slide and come to the conclusions already. As a matter of fact, we're talking at this moment about the aftermath. Well, first, this observation. I think when we observe last decade, we lived two important crises who were highly unpredictable. I think it was Ben Bernbrek who stated already in 2010 that the crisis 2008 was unpredictable. Between brackets. As a matter of fact, those two crises in this decade learned us one thing, that is that there are predictable things for sure, but that our society, our complete world, will always be attacked by totally unpredictable things. And so that we need to prepare to be continuously prepared for those unpredictable events that we'll mention. And that's where I use the theory of Taleb to put it into practice. As a matter of fact, he makes the distinction between fragile, resilient, and anti-fragile. What is fragile? Fragile is quite clear, and that's exactly what's highly predictable. Normally, when I ask to people what is the opposite of fragile, of the term fragile, they answer me, oh, the opposite of fragile is resilient. And as a matter of fact, it's not. Because being resilient is being defensive against fragility. The real opposite, the real contradiction of fragile is anti-fragile, meaning that you're not only able to cope with the crisis as such, in a defensive modus, but that you're even able to use the crisis in your advantage, to even go further and use a crisis as a catharsis in your situation, in the company situation, in the situation of our economic, societal, and environmental surroundings. And what does that mean exactly? Well, first of all, that we have to define quite clearly what is fragile. What is, and I showed it already, unhealthy before crisis, what is highly dependent. And we have different answers for that. We looked at the normal health of a company, indeed, SMEs, bigger companies. You have also the problem of the zombie companies. In Belgium, there are more or less, we define more or less 60,000 zombie companies, sometimes very big companies who are majorly too big to fail. And what that means, well, we have learned it by the previous crisis, the 2008-2011 crisis. What does that mean? that we have to study those cases, that we have to look where zombie companies are, how their dependency is on banks, for instance. And that does mean that we even have to put into question the whole Basel III agreements and even the future Basel IV agreements. That we do not only have to look to efficiency, but also indeed, as I mentioned already, to the cash reserves in a defensive way and to the redundancy to move further on. Fragile is being non-creative. The opposite of that is not just innovation, but even out-of-the-box innovation and adaptation, anticipation. Fragile is old school. Anti-fragile is being able to embrace new paradigms, the AI paradigm, for instance, talking about identity. Identity and even speaking about European identity. I think there's at this moment a clear notice of what European identity is. European identity is defined by focusing on the human being, developing technology, for instance, especially to surround the human being, to prepare the human being for the future. Talking about environment, think about Green Deal options and that kind of things. Thinking about circular economy. That's European identity on which we have to work for the future. And last but not least, I think that we have largely to move from a typical shareholders value economy to stakeholders economy, or in other words, from a competitors economy to what we call a systemic economy, meaning an economy where we respect the identity of each company, but really aim to not to compete, but to work together, to move together towards the future. Let this be my intervention.
Thank you very much, Eric, for this presentation. I very much like your starting metaphor about the person in cold water. A lot of SMEs, I think, are in cold water, and I think your reflection gave us a lot of food for thought for our discussion later on. I would like to move on now to our second speaker today. He is joining remotely from Reykjavik, Yudan Daying, I think it is, Ingvar.
Thank you.
Ingvar Birgisson is Director of Global Solutions at Credit Info, a global credit information provider. Ingvar is going to zoom in on lending issues, one of the parties that Eric was referring as a party that needs to coordinate actions with governments and other stakeholders. He will be sharing his reflections over the transformation of SME lending in a post-pandemic economy. Ingvar, you have the floor, please.
Very good, and I'm happy to be here to share my experiences and expectations on the transformation of SME lending in the post-pandemic area. So yeah, if we get to the slides, yes. So if you go to the next one. Thank you. So to give you a bit of an understanding of where I'm approaching this topic, I wanted to share with you the mission of the company I work for, Credit Info Group, which is to provide intelligent information and solutions for businesses and institutions to strengthen economic growth through effective decisioning and better financial inclusion. The next one. And so we operate and try to do this on globally, originated in Europe, but have migrated over to other jurisdictions as well. And I will be taking some examples from some of our markets globally to support the topics that I will be going through today. Next one. So the questions that we have been asking ourselves and looking into is that, like, what trends we can expect post-COVID in terms of SME lending and lending in general. What will it change? What will it change? And some of the questions that have come up are listed here on the slide. First one being, do financial institutions want and need to get people into their branches? I think the last 15 to 16 months have taught us quite a lot, taught us about remote collaboration and working and what can be achieved by digital services and solutions. And I think that is something that financial institution will be looking into, like will face-to-face integrations be as important going forward as it was before? Another question is related to how decision making can be improved going forward. What can we learn from this COVID period, and how can we prepare ourselves better going forward? And the third point is related to how should collections be carried out during and post-epidemic. I think that's quite a complex topic for many companies and around the world, and something that we can hopefully look into a bit more later on in this presentation. So I will be covering basically three main topics, starting with digital processes and signatures. Second one being data availability and decision consistency. And the third one being customized risk evaluations and collection solutions. Next one. So looking into a bit of a statistics from one of our markets in Northern Africa and Morocco. It was interesting for us to see how the credit report usage developed over the COVID period. And especially to see the drop in the period of almost complete confinement from March to June in that country. And of course, there are other aspects that can impact the fluctuation of credit report usage, but we at least see significant drop during that period, and the conclusion can be drawn that due to the fact that individuals and company representatives were not able to go to the bank branches, that the loan applications went down, and basically the lending slowed down during that period. So and what is interesting in Morocco is that although it's a relatively mature market in many ways, but in terms of digital services and digital processes, they're in terms of lending, they have not progressed that far compared to all the markets that we operate on. So if you compare like the usage in other markets where digital channels and digital processes for lending were active and more mature, this drop was not visible in our usage statistics, and even in some cases there was actually an increase during the first few difficult months of the COVID data. Going to the next one. Thank you. So digital processes and automated decisioning in banking and lending is of course not something that we are enacting now. This is something that this has been I would say quite significant trend in the last few years, and but I think that what COVID and this period will help us is to understand and get the feeling of that the face-to-face integration is not always a prerequisite for doing business or doing lending, and I think that the banks will be looking into the opportunity to introduce more of the digital processes and automated decisioning and lending in order to increase the effectivity and efficiency both for the SME or the individuals that are applying for the loan, but also for their internal processes, and hopefully use the data that is available to take even better decisions than before. To the next one. I also wanted to mention a bit about the data availability, and because it's very important that the relevant and appropriate data is available, and that is a prerequisite for us to be digitalizing our lending processes and taking better decisions in general. And we have seen a positive trend in this in the last few years, and where data on businesses are becoming more accessible and available. And this has partially been driven through new regulations such as AML and PSD2. But here I think it's important that the different stakeholders, so from regulatory to the financial institutions and credit bureaus and the SMEs, work together to continue to push this trend that we have the relevant and appropriate data available so we can take better decisions and potentially automate them. Decision consistency is also a very important part, where and in order to be able to retrospectively analyze our decisions, it's important that they are done in a consistent manner. And this is especially important during and after a crisis, where you would need to have the consistency in order to go back and understand what happened and what were the basis for the decisions that were made either before or during or after the crisis. And moving our decisioning into more digital processes will help us to do that, because that will eliminate manual mistakes and personal subjectivity. It will allow us also to use technologies such as machine learning to do retro analysis of the decisions and hopefully optimize them. And the next one. So in the end, I wanted to share a bit of information about some of the solutions that we have been discussing internally and also with our clients. So the first one is related to collection scores and prioritizations. So I think it's especially important in the COVID crisis or crisis in general that you have clear and fair processes for collection that are based on the available data to predict the likelihood of recovery. I'm sorry, the sizes of the font has somehow gotten mixed up, but I hope you are able to see this. But to share our experiences globally, we have seen a significant increase in the interest of the collection scores and solutions, and we want to use them in order to enable prioritization of collection efforts based on the likelihood of both the recovery from this particular default, but also the likelihood of recovery from the pandemic. And there, it's important to look into parameters about, for example, business viability and so forth before the pandemic, as Eric was mentioning earlier. The next one. It's also important that we take into account the payment moratorium post-pandemic impact. And here, I think companies like the credit reference agencies, the credit bureaus, are able to support the financial institutions, because the companies that have had the payment moratorium might be burdened with increased installments, which might, going forward, that might limit their future growth. Also, credit scores have generally not taken into account or not been impacted by the payment moratoriums. So we have actually seen in many markets that the credit scores have on average increased, although we're going through a recession. So to share, and to share a bit of an information from Iceland, we can, for example, say that before the crisis, the average default was around 5.5% on companies, but during the last 12 months, the average default rate was actually dropped to 3.3%, which is quite interesting because in Iceland we are heavily dependent on tourism, and which have obviously dropped during the last 12 months. So, but going forward, looking into the next 2 years, we are expecting a significant increase in the default again, and potentially go up to around 10%. All right, and to the next one. Yeah, and the last point was related to how we can support governments in the decision-making of the business support loans that have been provided in many markets. So the government were in many markets that we have at least experienced not prepared, and understandably so, for evaluation of a huge extent of business support loans to keep the companies afloat. And again, if you look into some statistics from Iceland, a significant amount, at least in our small economy, of funds were made available for bridge loans and to support the businesses. And what we did is that we engaged with the Icelandic Ministry of Finance with recommendations for what they should be considering in terms of the evaluation of how to distribute these funds and which companies to support. And I think that some of them were actually taken into account, but probably in hindsight we could agree on that if we would have a bit more time and not under the severe pressure that the government was under, that some of these evaluations maybe could have been a bit more advanced and comprehensive. So that's something that we can take about to as I think Eric was mentioning as well, to prepare ourselves better if we would find ourselves in a situation like this again in the future. So this concludes my discussion for today, but I will be happy to answer questions later on. Thank you.
Ingvar, for your presentation. I think your points about data availability and decision consistency will resonate later on in the discussion. I also take away your point about the number of companies that in Iceland have become bankrupt and the potential increase of that number going forward, which takes me somehow back to the audience and to the poll that we have opened for just a few more minutes. In your opinion, how much time do you think will pass before the economy returns to its pre-COVID level? I'll explain to everyone what is going to happen next. So I will now move on to the additional 3 experts. I will introduce them all in one go. Then I will close this first poll and I'll open the second poll. And then each of the 3 additional panelists will have their 5 minutes to share their impulse statement. So starting with the person that is with me here at the studio, Gerhard Humer, Economic Policy Director at SME United, which is the voice of the SMEs in Europe. Through Gerhard and SME United, we have represented here at this event 24 million SMEs that count for 99.8%, if I get my figures right, of all enterprises in Europe, 2/3 of the employment and 60% of the added value created in the European Union. So thank you very much for being with us today. Away from the studio, joining us virtually, we have Nina Schindler, who is the CEO of the European Association of Cooperative Banks. If Gerhard's numbers are impressive, I think your numbers are also fantastic. You lead an association that is the voice of 2,700 cooperative banks, 85 million members, and 214 million customers. Nina and I have worked together for many years. You have my respect and my admiration. Thank you very much, Nina, for being with us today. And the third person that will intervene is Anne Schadler, head of the Policy Definition and Coordination Unit at DG FISMA, which is the unit competent for, among other things, the organization of the European Commission's roundtable with stakeholders that led to the establishment of the industry's best practices for helping businesses hit by the pandemic, a project in which SME United, the cooperative banks, ACCIS, we all participated, and I think that delivered very good results. And in fact, if I understand correctly, this initiative has been nominated for the European Ombudsman Award for Good Administration 2021. So congratulations for that. Have you won? Do you know already, Anne? No. You haven't won, but in any case, we are very proud.
No, the ceremony hasn't taken place, so we have been nominated, but we are not yet there, so we don't know who is winning. But if you want to vote for us, you're very welcome. Maybe we get the public a vote.
We can invite every member of the audience to vote for you. You're a winner anyway, because I think the nomination was very good news. So we will move straight away with them, but just let me then now close the first question that we had for today. And I hope you have all voted. And I am going to immediately open the second question of the poll. Let me see whether I managed this correctly. It should be now on the slide. In the wake of the pandemic, do you think that the standards for businesses to have access to new credit will remain unchanged or tighten? So that's the second question that we would like to ask you. We will give you around 15 minutes to respond, and then I will start showing to you the results of the both two questions. But before we go there, Gerhard, I'm starting with you. What are businesses most worried about as we now technically start exiting the crisis?
Okay, thank you, Enrico. First, I have to correct myself or you. After Brexit, we only are 20 million SMEs anymore in the European Union, but it's still an impressive number, and the importance has not changed for the whole economy. I think to understand what happened at the moment and where the most important concerns of SMEs are, we have to make a short look in what happened during the crisis. At the very beginning, there was a shock. All member states, governments, and the European institutions have rolled out support measures. And if you stick to the financial market side, it was mainly about ensuring liquidity of the companies, avoiding bankruptcy, and this worked quite well after a certain moment when the procedures were adopted. Also, thank you to the round table, who was very helpful to make this better work. But it was clear additional loans with guarantee or without guarantee, postponement of tax payments, postponement of other payments of companies piled up the debt levels in these companies. And originally it was okay, it will take 3 months and then it's over. And there was a lot of optimism over the summer when the first lockdowns were relieved. But then with the second wave, the real problem started. From the political point of view, it was clear they will continue the measures. When they lock down, they have to do something. It was so good, the support, that we have lower number of bankruptcies than in normal times. That means we also have rescued companies which would have gone bankrupt in this period. The average is quite similar than Iceland. We have only 50% less insolvencies in Europe than in normal times. It's also the situation when we ask now, quite similar than in Iceland, that they're not strong data, but a lot of fragments, which leads us to the conclusion that it will be about 10% of SMEs which are at risk of insolvency at the moment. In some sectors, it's up to 30%. This is the situation where we are at the moment. Super high debt levels, and a significant high number of companies in risk of insolvency. When I take the picture from Eric with the ice water, it's quite late now, and if we bring them out now, out of the water, not only they have eaten up the fat, but they may come out in a new world. So we cannot anymore, as we have done at the beginning, say every company which was healthy in the beginning of the crisis should survive, and we have to do everything to survive them. We have to do a fresh look now. We have to now do a fresh look on the company and say, is their business model still viable? Is there a positive business outlook? Will they survive in the new world with different travel behaviors, with different kind of events, and so on? There are many of them have already started to be very innovative and running well, but others will come out of a lockdown and see there has something changed. And this is the big challenge now, where the banks have to help us to look into the viability. Of course, your members, but also promotional banks, guarantee providers, all which have information and are used to analyze this kind of questions, are now important to come together and go in this direction. And this is also what we are trying with the European associations now to roll out and convince the different national levels to start such dialogues, have not only round table at European level, we need similar round tables at national level, etc., etc. Because it is important to coordinate the response. We have different layers. Of course, giving just additional subsidies, we are fully right, will not solve the problem. We need the right balance between regulatory measures, and I am not speaking only about Basel III and solvency, where in the midterm perspective, we should reflect if the current regulation is good enough to attract private financing for real economy. But it's also the insolvency regimes, it's the tax regimes, which has to be looked into if they are hindering the mobilization of private investments or capital, etc., etc. It's the supervisory element, where can supervisors do something to help banks and insurances to overcome the next period till the restart? But it has also to be measures on the fiscal side, fiscal measures, in the sense that public loan guarantees may be transferred into equity or into grants. There are measures to help SMEs to recapitalize themselves, to get increase the creditworthiness, etc., etc. And for those who maybe not viable enough to do it on the private sector market, on the private market or with banks alone, there has to be the support for restructuring, but also to do proper insolvency procedures when needed. We have established in some of our member organizations, in some member states, so early warning projects where restructuring can be done earlier, where restructuring coaching is provided, etc. And we can also use the current implementation of the insolvency directive, which has to take into account, I think we'll start in beginning of July, to provide insolvency procedures which are faster, which allow a second chance, a restart, and especially which provides the capacity, if we really think that the numbers of insolvency procedures will increase significantly over the next 12 months, we have to make sure that these procedures can be managed and handled at national level. So therefore, let me finish with one thought that I think we are at the moment in a situation where, okay, we are happy, lockdowns are down, summer season starts, etc. But I would say in a couple of weeks or months, we will have a much clearer picture about in which way the different companies come out of this crisis. Will they be able to restart earning money, making money? Will they be able to get profitable anymore, etc. Again, etc. And then I think maybe in September, October, it's already a little bit easier to see which SMEs are able to survive, and also which support is needed for them to survive. I will leave it here for the moment, and thank you very much.
Thank you very much, Gerhard. I take away somehow a degree of urgency. I mean, if the number of companies that are going to go bankrupt is increasing drastically, possibly in the next few months, clearly the need for action is urgent. And you've talked about a comprehensive policy mix where banks also certainly will have to play a role. And you have already called for some alleviation, perhaps, of prudential requirements for banks to continue lending to the economy. Nina, I'm looking at you now. What will you have to contribute to the discussion? Already, I think Gerhard gave you a very nice landing platform to make your argument. So over to you.
Yeah, first of all, Enrique, let me thank you and ACCIS for the invitation to speak on this distinguished panel after the stimulating presentations and after Gerald's words. Let me underline at the beginning, for the European cooperative banks, which I have the honor to represent, SMEs are key customers of the business segment. So local entrepreneurs are among our owners. They sit in our boards, and we often even have them amongst our founders. So our banks, but to be fair as well, all other banks as well in our environment, have so far done what they could do to support their customers in the recent difficult months after the COVID pandemic started. So many moratoria were granted and loans were restructured, and we all shall do our best to keep up the support in the time to come. However, I fear that we shall see in the coming months, and Gerald said that many SMEs will be under severe stress. And in fact, due to financial and non-financial COVID measures, we had extremely low amount of insolvency during the crisis. So also the level of non-performing loans in 2020 and even in the beginning of 21 were far below what we have seen 2018-19 before the crisis started. I guess in many cases, public support measures, but also the moratorias granted help companies to move on or to hibernate and wait for the end of the crisis, yeah? And that might change now. And the expectation is that we shall get an increase of insolvency. And I would fully agree with what Gerald just said, beyond the pre-crisis level in the course of this year and the coming months. Of course, it's difficult to foresee, as Gerald said, for the moment when it will be starting. This almost ceased inevitably after the artificial low rates last year. And this will hit sectors, but also regions and countries differently. While in some sectors, of course, the pandemic has brought activities to a full standstill, others only suffered from a reduced productivity due to COVID-19 safety measures. Just take, for example, touristic regions were certainly more hit than other industrial areas. Therefore, I believe the decisive moment are coming now. As support measures are about to end or to fade out, it is the recovery that has to kick in now and to allow companies to generate the income for the future they really need. Much, therefore, will depend on the force of the recovery and how member states, and it's really member states level, how member states will design their national plans under the Recovery and Resilience Facility. And this recovery, again, will vary among sectors and regions and nations. All are facing different grounds. While in some sectors, if only they can reopen again, business will quickly achieve former levels again. Just to give you an example, which pops in my mind, like hairdresser, spa, sport clubs, fitness studio, we all see them opening again. And the process may take longer in other business sectors until the demand for their products reaches pre-crisis levels. Gerard mentioned, for example, we don't know when business trips getting back to a level pre-crisis, like looking at hotels, at airplanes, whatsoever. And more the pandemic and the protective mode in which we are living has led to changed customer behaviors. And it is said, for example, that retail trade has lost relevant market shares to online trade. We all know our own behavior during crisis, yeah, where we ordered products via some companies online, yeah. And this lost shares will most likely not come back. There will be new business opportunities due to this new consumer behavior, of course. Unfortunately, however, the new economies need new people with special qualification and not necessarily those from old industry. Gerald mentioned that as well. So we really don't need which companies will recover, how quickly, and if at all. And finally, COVID-19 has been the root for many bad surprises, and we cannot be sure that we have seen the last one yet. And thus, the challenge are manifold. Uncertainty about the recovery and change customer behavior and so on. And from today's perspective, banks have not been a problem, but rather a solution in the crisis. And I have no doubt that especially cooperative banks will continue to provide loans and do what is possible to restructure loans as well when required. And here I want to pick up on what Eric said about defragilizing the economy and the role of stakeholder value. Cooperative banks are defined as stakeholder banks, and as such, they will approach the fallout of COVID from that perspective as well. But stakeholder banks or not, the prudential framework has its limits, to say. Tight standards for default and forbearance do not really reward many forms of customer-friendly behavior in the current context. And admittedly, from a supervisory perspective, it's evident that the fear of a considerable increase of insolvency rate is not a good argument for relaxing prudential standards now, and thereby aggravate the situation. Just, you might have heard the Basel Committee suggested allowing the use of various buffers. However, that would only give a very limited and especially temporary relief. And it must be underlined that as well that loans are not the only solution in these cases. Many companies will rather need own funds. I know that some of our members swap the loans into equity, but honestly, as a general rule, banks are not fully equipped to adequately manage a large number of participations in SMEs. And therefore, we really need public capital as well, public capital support programs. However, also in this respect, needs may be considerable vary. Therefore, what is needed in this situation is that debates are organized in the form of roundtables between companies and banks and authorities at regional and national level, so like the one of the European Commission. And in order to explore difficulties and the jointly identify solutions altogether. What we see is that the exit from the pandemic will be a sustainable one. Cooperative banks with their specific member focus are particularly sensitive about this topic and engage in various projects. The multiple work streams of the European institution related to sustainability ensures a strong sustainability focus on banks in the coming years, which we very much like. Perhaps before I close, a last comment on the elements brought up by Ingvar in its presentation. I think he made some valuable points as regards opportunities that better data management and analysis can offer in accessing company viability. And indeed, cooperative banks are also experimenting with the use of AI in this context. But I would not yet be in the position AI as a panacea can produce in its own form of bias, just as human intervention can. Cooperative banks with their proximity-based model see clear benefits for the soft knowledge as well that personal contact with entrepreneurs can bring, and will maximize the use of this asset in post-COVID discussions. So let me close with this and just congratulate Anne as well to be nominated with the COVID roundtable. And of course, I already did vote for this initiative, and I really hope you might have a good chance to win.
Thank you very much, Nina. You see that everyone roots for you, Anne. You're coming last to this first round of intervention. I think a lot of people have given you the opportunity to comment. There had been references to challenges that are manifold, that we need a comprehensive policy mix, that action may need to be taken at different levels, regulatory and non-regulatory, at European and at national level. So what's your take a bit on all the things that you've heard so far, and what are your ideas as to in what direction policy making could proceed going forward?
Okay, I tried to cover many of the points what different speakers in front of me, before me, have raised. Thank you very much also for inviting us to the discussion. That's very much appreciated. So I think I would make 4 points. So let's start with the at the beginning of the crisis, as many of you also have said, we believe that it was managed quite well, so that it was fiscal support. There was from the Commission the banking quick fix, which allowed banks to continue lending and keep the liquidity for companies. It was also the accounting standards which were modified. Then we had the roundtable, the first two versions of the roundtable, which resulted in the best practices, which were also worked very well. Then we had in February a third roundtable, where it actually became apparent that one of the biggest the focus we should take now is on restructuring, so that that restructuring of loans would be made easier, because many companies piled up long moratoria and that over the lockdown period. We had Nina referred to that. We had a quite intense discussion with the regulators if there was some flexibility in the prudential standards possible to do that. So in order to allow banks to have more flexibility to restructure loans before they would be qualified as NPLs. And unfortunately, it's pretty difficult. And at the moment, I don't think we will be able to convince the supervisors, these are the national supervisors which decide on that, to take a more relaxed stance on it. Because in their view, overall, so if they take a EU-wide look, the picture is not that bad. And so you have some member states, of course, where the picture is worse, especially if the southern member states where there's more reliance on tourism, for example. But the picture is very diverse. So at the moment, it's rather if things don't get worse overall, this is not going to change, which is of course none of us want that things get worse, but we all want that everything gets better. So we are not too hopeful that we can go forward and can deliver on this regulatory relief on the prudential side. Then we had also discussed with many stakeholders which were present in our roundtables if there would be a possibility to look into revised version of the best practices, for example, that would have been also nicely fitted with the prudential side, which at the moment is a bit stuck. And there also what we heard from stakeholders is that the situation in different member states is very different, and that it would be actually difficult to agree on something European because their members, so the European like umbrella organizations say, well, their feedback from the national level is that it's very diverse. So they would rather try to pursue this at national level, to have roundtables there, which like from the Commission point of view would have liked to continue, but as it just, if it makes more sense to do this at a national level, then of course we would support that, and we are not pushing for having a European wide solution if it doesn't make that much sense, and things should be better targeted than in different member states. So at the moment we are thinking, we are observing the situation, and we will see if there is a need for another roundtable and how things evolve. As also Gerhard said, let's see maybe in autumn or after the summer break how things develop. Then a third point rather on the insolvency procedures. There I also very much agree with what Nina or Gerhard said before. So it's everyone sees this decrease of insolvencies over the last year, which was also due to the fact that the obligation to file for insolvency was suspended in many member states. So when this suspension is lifted, we will see rather a strong increase of it. And here the Commission really encourages the member states, it's in the hands of the justice ministries usually, to prepare themselves to make sure they have efficient procedures in place, that the staffing is sufficient in order to go through insolvencies procedures quickly, to have a mechanism maybe to prioritize the insolvencies which could have a bigger impact, and where you want to rather give quickly certainty how this company can maybe restructured, can be broken in parts can start operating on that. Some parts will continue, and we are encouraging member states to work on that. But it's very much a national competence as well. I mean, we have the insolvency laws, we have the second chance directive, which is, by the way, not for DG FISMA, but for the Department of Justice, or the DG Justice who does that. But of course, we work together on that. So on insolvency, we hope that this new directive will help the second chance, but also already now, once the insolvencies increase, that member states are prepared for that. We see for some, we hear that they are preparing. For others, it's they are more listening, and maybe there can be. I mean, we're encouraged to share best practices when member states have good solutions on that, and to discuss this topic. And then lastly, looking forward, like on the new priorities, I would like to mention digital and also sustainable. Ingvar mentioned the importance of digitalization. We have all seen the increase of digitalization in the last 1.5 years, where everything started to switch into online mode. So this really was, I think, a catalyst for increasing and the ambition of preparing the economy for more digitalization. The Commission has many initiatives in this area. It's partially, I mean, on our side, on DG FISMA, we had a digital finance strategy in last September. We are thinking about a framework for open finance. Let's say the big lines still need to be defined, but the idea of having more accessibility in the financial sector of the different providers who are different parts of the financial industry would be able to share information and have access to other information, which would help hugely. I think the business what Ingvar and credit analyzers are working on would hugely benefit from that, of having a bigger data set in order to work on that basis. They are also very aware that it's that open finance should not get too, let's say, should rather focus on the financial industry in the beginning and go in steps, and that we're also conscious of big tech companies which are out there, which we have in the analytical capabilities, probably some advantage, and we would need to balance how this works out. But you have also the eID initiative, which allows digital onboarding of customers. So there's a lot happening in the digital space, which will be very relevant, I think, for the next decade to come. And then on the, and there's also the AML and PSD2 Ingvar mentioned already, which is in place, but there's also this European single access point is also in the making, where company registries and data from SMEs and from national data centers would be connected and would be more accessible at the European level with a single access point, which connects then all the national databases. So this, we hope, is also very relevant, that investors would have access to information of SMEs across the internal market, and not only focused on the in their national market. So that's one of a pretty big initiative under the CMU action plan, and we would come forward with a directive, I think, for the ESAP, for the single access point, by the end of the year, which of course needs to be set up, but it's, I think, a good initiative in this area. And then on the sustainability side, also this is of course a big priority for the Commission. We have already 2-3 years ago started, of course, with a sustainable finance action plan. We were, I think, in FISMA actually a bit ahead of the curve on the sustainability side, and we have put many elements in place over the last 2 years. The work there will continue, but we are more looking at closing gaps which are currently not not yet looked at. So we are not going into a big overhaul. I mean, what has been done since 2018 is still valid, and we are rather still implementing it, and we are working on finalizing this. But overall, also with the funding which will come from the Next Generation EU, the issuance first, but also which will then be handed down to the member states, has of course this big digital and sustainable focus, where EU funding should go into these future-proof companies and encourage companies to develop and become more anti-fragile, so to use the phrase from the first intervention, in order to make the European economy future-proof in the sustainable and digital side of things. Okay, that's all from my side.
And thanks very much for this overview of the policy mix. Indeed, as you have mentioned, a lot of initiatives are already going. I think perhaps if I can temporarily switch to my ACCIS hat, the points that you have made about the single access point for SME data and the initiatives that are ongoing to make sure that data held by public sector bodies is moving more freely into the economy. I think that's very important. I think Eric already explained at the beginning that the analysis that he's able to perform in the Belgian market, I wonder whether this would be able to be replicated or reproduced in other jurisdictions. Maybe you're sitting here on a jurisdiction that is very pro data sharing, and maybe not the case in other countries. I like to close, I think now, the second poll, which was in relation to the standards for businesses to have access to credit. I would like to encourage you to pose your questions. Let me know how far we go with questions. Not very many for the time being. So can I have, for example, now the results of the first poll, just because we discussed about companies going through difficult times going ahead, and possibly that may have a delay on the economy. So I don't know whether people are seeing them. Yeah, very well. So in your opinion, how much time do you think will pass before the economy returns to its pre-COVID levels? More than half of the people, 55% of the respondents, thought that it would take more than a year. So now that figure has come up a bit to 27, so that people are apparently they are still voting, which is it's fine. So what do you think? I mean, does this view from the audience concur with your own views as to the recovery and return to normal activity? Gerhard, I'm thinking that perhaps you're best placed to comment on this.
When we read our figures right on the outlook for businesses, I would be a little bit more optimistic. If there is not really in autumn another really lockdown and confinement measures to be taken, and travel restrictions to the same level than we have seen now, I think we should be back to normal in the first quarter of next year.
Very well. Anyone would like to comment and provide an opinion on this prognosis? Eric, I'm looking at you. You sit on much more information than the rest of us, so possibly you can comment better.
First of all, I think I have to be a little less optimistic. Just looked at the Belgium situation. We had some very hopeful comments recently by the Belgian governor of National Bank, stating that this year we will grow with 5%. But this growth is, of course, towards the situation in 2020. So 5% now means that we still need another 5% and even more. That's the first point of view. But then the main reaction on the question is, of course, I understand the question and the reaction on the question, but I think it's the wrong question, because it suggests that we all want to go back to normal. And that's a question. Do we want to go back to normal or choose for a new normal? And that's quite different.
I think you made a point, and also you, Gerhard, about when we sort of wake up somehow for this bad dream, that we are waking up to a reality that has changed, and going forward, indeed, the situation will not be the same. We have new priorities, digitalization, sustainability. So companies do not need to go back to the past. They need to adapt, as you have said, and evolved into the future. That's difficult, and you've talked about the need for policy coordination and cooperation among different stakeholders, including banks, credit reference agencies, policymakers. You talk also about the early warning system that some of your members are putting together. Could you please explain a bit how you would see that system perhaps roll out more and be more used?
First thing, I agree that we will go back to a new normal and not to the old normal. But the question here was about the level. Yeah? But the level can be same level of activity, but doing something different. Yeah? The early warning stuff, I'm not the real expert on this topic, because it's not me who is running this project in our organization. But the basic idea is to provide, together with accountancies, financial instrument providers, etc., a possibility to self-assessment, to help SMEs to look into their figures a little bit more with the view of viability, etc., and then helping them if there's a need to do something to restructure as soon as possible, to avoid insolvency, and if insolvency happens, to do it in a way that a restart is possible. But I'm sure that Eric can tell more about this kind of thinking and this part of the work within the whole context.
Well, as a matter of fact, yes, because I didn't know that this subject would appear. But as a matter of fact, I made part of the European, how is it called again, High Intelligence Group for Early Warning. And we worked together on a European level just to investigate how we could develop early warning systems towards companies. And of course, self-assessment is quite important, and delivering self-assessment instruments is one thing. But the main observation is that most self-assessment systems, or assessments in short, are based on figures, balance sheets. And that, as a matter of fact, when we look to balance sheets and that type of figures, we observe symptoms and not the causes of the problems. And let's put it that way, my company last 10 years has been more and more driven into specialization into understanding what we call intangibles. If you really want to understand the evolution of a company towards difficulties, well, you first have to understand what their motivation is, what their management style is, what the motivation and the innovation powers are. And we develop more and more together with this expert group systems who are able to make this to distinguish the difference between companies in good health from an intangible point of view and the others. And that does mean that you can also create proactivity from aid organizations, from government, and so on. Because when you see that a company going down to bankruptcy, when you see that you can't get them here, meaning at the moment that you see the symptoms in the balance sheets, but at the moment that you see that there's something wrong in the management style, for instance, well, you can proactively contact them and drive them towards more support, direction, well, learn something about management styles, learn about something about change management. And we discovered in Belgium that using this type of instruments, we are capable to help companies making a U-turn in a very early stage, even preventing that way a situation of nearly insolvability and so on. So I think we need two types of approach. The approach indeed of, well, just looking to the figures and talking about Chapter 11 systems and that kind of things. And then the real proactive action, where many times small SME companies who are not even aware themselves that they might construct a problem, are warned and helped. And that's quite different.
I think you make a point about proactivity, and proactivity is always possible provided you have previous intelligence and information about companies. There is a question from the audience that is addressed at INFCAR. They would like to know, can you explain more how you do KYC for SMEs? And what kind of data do you use for that? I think it's very much in the context of this: get to know your customer, understand their needs, understand how you could help, understand what products are working. So Ingvar.
Yeah, so in the KYC processes for SMEs, usually the financial institutions that are looking into the possibility to onboard that particular SME and to potentially provide them with loans or other credit products are obliged to do a background check on the company and get an understanding of the ultimate beneficial owners, which is usually like one of the key data points that would need to be gathered, and to get an understanding of which persons are actually through potentially other companies the actual ultimate beneficial owners of that particular SME, and then in some cases background checks in terms of sanctions checks and PEP lists, so politically exposed people and so forth. These kinds of checks are done on the company representatives and the ultimate beneficial owners. So this would be this would be one of the checks that would be done during a KYC process for an SME, but as well to go in and for the banks to go and look into information about the company in terms of financials and history and so forth.
Thank you very much. I think one of the issues that also, Nina, you mentioned is the potential spiking in non-performing loans going forward, and the impact that may have on the financial system. Do you think that we are equipped somehow to deal with that? And the banking system, is it resilient to, at the same time that you are coping with that, take into account the need to continue financing the economy and do your traditional role of providing financing to businesses?
I think nothing has changed there. As I said in my remarks already, I'm sure that the banking system, especially as well the cooperative banks, are really well fit for providing loans in the future time. But what I mentioned as well, at the same time, we should maybe not only look at the issue of providing loans in this context. I mean, now entering into a new phase of recovery, from our perspective, there are other issues which we should take in mind, like how to restructure the financing of companies, and the idea around equity financing that should be activated by the public sector, and in general, how to manage consumer debt and how to involve the public sector and to adjust prudential and the supervisory framework, what Anne was mentioning before, which is quite difficult for the time being, because to do something on legislative level might be a lengthy process, and therefore we need as well sort of flexibility of the supervisors, which are national and which is not always easy, as Anne correctly pointed out. So I don't really see the problem on the loan side. So it's a bunch of things which has to be done in the future.
This bunch of things, and going back to you, I think most of the initiatives that you suggested indeed are for member states to take. You explain about the diversity of the situation in different countries, and not always easy to promote European level alternatives. On that note, is there anything still that the Commission could do to promote these national initiatives from materializing and from taking place? Do you see a space there for the European Commission, perhaps as a sponsor of these initiatives, to put them in place, to coordinate them?
I mean, what we do, for example, on the debt advice for SMEs and for consumers, so when SMEs or consumers run up huge debt and risk of being over indebted, there, for example, we have an initiative in place where we run pilot projects in several member states where we support the national debt advice services. And encourage them to bring best practices in countries where it's not so developed. For example, in Germany, you have quite a good debt advice service, and in other countries you don't have it. So we invite them to share this with others. There's like a platform to do that. So this is one thing which DG Just in this case is doing in order to make it work at the national level. And what I mentioned earlier on the insolvency proceedings. This is at working level as well. So encouragement of the members of the ministries, the relevant ministries, to get prepared for that. Yeah, I think these are the two spontaneous things which come to mind.
Very well.
Yeah.
That's very useful already. So we're getting close to the end, but I'd like to, before we close, certainly to see the results of the second poll, where we were asking people about their views on access to credit and whether the standards would be tightened or not. I think the results are on the screen and you should be seeing those. So for most people, for 43 of the people, standards to access new credit will tighten. So in principle, it will become a little bit more difficult to have access to credit, and then 29% they think that they will ease, so the contrary view, and 29% thinks that they remain unchanged. Does this come as a surprise, Nina?
I mean, what we saw in April 21 edition of the Banks Lending Survey, banks already indicated a moderate net tightening of credit standards on loans to firms in the first quarter of 21. However, that was really lower than expected, yeah? And the same survey also indicated that a decline in firms' demand from loans or drawing of credit lines was noticed in the first quarter this year, mainly driven by a continued dampening impact of firms' demand for financing fixed investment, as firms tended to postpone investment, yeah, and that was that correlated. In addition, in net terms, firms did not demand additional financing of working capital, reflecting available liquidity buffers and direct government liquidity to support, especially for SMEs. So that would be my response.
Thanks very much. Gerhard, please.
What we see in our surveys is that since de facto since December, there is a slight tightening of the credit conditions, but as Nina said rightly, it is not dramatic. It's very light, and it is also a reaction on a situation where over the summer and in the beginning of autumn last year we had a really quite a low quite easy standards. The big question for us is always, if you ask an SME how you see the situation, it depends also a lot on accompanying measures. If you give them a bank 90 or 100% guarantee, then it's easy for a bank to hand loans out without any additional collaterals, etc. And now we see when this goes back, then of course the banks have difficulties to take new or additional risks on their balance sheets, and this will continue and can only be compensated by support measures on the subsidy or support side or on the supervisory side.
Very well. We are coming more or less towards the end. I have still some few minutes left for my concluding remarks. I'm trying to summarize later on what you have said, but I'd like to give anyone now the chance perhaps to comment if you have perhaps picked up on something that your fellow panelists said and you didn't have the chance to react to that. Anyone would like to say something to each other? I see no, you're all fine. I think it was very clear from your side. So what I would have to say in terms of concluding remarks, I think information on SMEs is, I think, of vital importance to understand their behavior, to understand their evolution, their prospects for success eventually, certainly for banks to do their work. A lot of this information is publicly held, and maybe the challenge, or at least that is also what we think it is, a challenge is to make sure that it flows back into the credit ecosystem and it can be used to take lending decisions or strategic or business decisions. I think it was mentioned that we need a comprehensive policy mix, that it needs to include fiscal measures, it needs to include prudential measures, it needs to include a lot of things, and those things need to be pursued across the single market. We have said that there is a lot of diversity across the single market, but perhaps not so much from the European Union level, but involving certainly national authorities. We need more discussion, coordination among stakeholders, and that could be organized. And I hear two of you made a reference to roundtables at national level. So certainly, I guess your members and my members are very happy to promote and take part in those. I think we also talk about the need to look ahead and see how this next EU generation programs in a way also can contribute to shape the new European economy and to make sure that we wake up in a different normal. We're not going back to the past, we're going into the future and take it with both hands. And I'm looking at you just to make sure that you keep me on check, speaking under your control. Is there anything that I have not captured that you would like to still add to the concluding remarks? Anyone? Did I make a fair summary of the discussion today? I see nodding people. I hope the audience enjoyed our conversation today. And I like to just conclude by thanking my panelists for their help and for their contributions, to the ones that I have here and to the ones that are joining us from further afield. So thank you very much. And to the audience, this is the first session of the ACCIS Conference. We will have another second session in around 30 minutes time. But in the meantime, don't go away, or maybe grab a coffee and join the discussion, the networking section of the conference platform, which I think is on the right-hand side. Again, yes, on the right-hand side. And I'll see you in 30 minutes time. So thank you very much.